Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Megan Brantley. She's the VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking ROST stores. They report earnings after the close tonight. Stock's only up a couple percent this year. Should it be only up a couple percent? Because we've seen some of these discount retailers, whether it's Dollar General, Dollar Tree, Target this week, just been getting blasted because people are making different choices, maybe. I don't know what's going on here, because inflationary pressures would probably signal these stores should be doing better, right?
Right. So whenever we look at this, I think that at a high level, what we can learn from Walmart and Target is that consumers are being very selective in where they shop and what they're buying. They're looking for value. They're looking for deals, which, as you mentioned, this should seem like it should benefit a name like ROST because this is a discount retailer. But when we look at our data, we don't necessarily see ROST as a major winner or a major loser. This, for us, it kind of looks meh, for lack of a better term. Whenever you're looking at this chart, though, this is the small glimmer of hope that we have for positivity when it comes to ROST stores. And you can see that from a digital traffic perspective, major overperformance. And I'll add a caveat to this, because really what this is these are consumers who are going online to see, what are Ross's hours, when is its store open, where is the closest store to me, things like that. This isn't necessarily consumer shopping, because whenever you talk about these retailers, it's all part of the discovery. It's all part of the in-store hunt. So in theory, consumers who are going in-store and hunting deals, this should benefit something like a ROST, because we do see signs that consumers are talking about, okay, yes, I am planning on doing some in-store shopping and I'm going to be very selective about that. But then on the flip side, we also see major traction out of retailers like an Amazon. That's something that's not on this list. We see year over year web visit gains in that e-commerce platform really up. And so for us, it's a bit of a cautionary tale whenever we look at ROST, because while we see some increased action that lets us know that consumers may be going in and hunting for deals, when we look at mentions, we don't really see an increase in mentions. Those look pretty flat year over year. It's a really boring chart. And when we look at consumer searches or things of that nature, we don't see any major action for ROST. It's a pretty boring chart. So for us, we're not seeing a ton of consumer enthusiasm from a sentiment perspective or from an actual, I completed a purchase perspective. But we do see some signs that there could be increased foot traffic of consumers who are in there hunting for deals.
Megan, this is not a sexy name that we're talking about here today, as you know. But if you start to read about this company, I've never been in a ROST stores. Have you?
No.
They're really not in the Midwest, are they?
There are. Yeah.
Really?
Yeah. Mm-hmm.
Okay.
Yeah.
Really?
I've never been in one, but
so,
yeah.
But the more you read about them, the fundamentals are strong. They're a low-cost operating model, pretty high return on invested capital. They want to get up to 3,600 stores while maintaining the revenue per store. The story is pretty good. Why isn't this company more on the radar screen of everyone that's talking about retail? It's kind of an afterthought almost when we talk about TJX and all these other bigger names. 3,600 stores is not something to ignore.
No, for sure. And when we look at this, we do see consumers, when they do find a deal and they find something that they feel like is a really high value at a lower price, they're very excited about it. But a lot of times we see consumers who go in and they're hunting for deals and they come out empty-handed. So I think that from a sentiment perspective, there could be a bit of a lack of consistency there of whether consumers feel like they can find what they're looking for when they're going into shop and that this is where they want to spend their time shopping. So I think that could be part of the issue, is that at large, this isn't one of our high sentiment scores. Another thing that we've been watching last quarter, I think that its margins were a bit squeezed. They decreased, and they expect more margin pressure heading into the second half of the year, which that's a bit of a caveat heading into this earnings report, because for us, we don't necessarily have as much insight there. And so I think that that's something that investors should keep in mind. And so for us, it's a bit of a mixed bag. That increase in digital traffic of consumers who are interested in checking out the stores, that to us could be a sign of positivity, but that's probably the brightest spot that we have in the data. Everything else looks like the stock is priced about right.
When you look at the competition in here, in this space, you know, the discount retailers, and, you know, I know it's different than Dollar Tree, Dollar General, Five Below has been hammered too. A lot of these.
Really hammered, Five Below.
Hammered. Is the competition from China, Shein and Temu, is that really taking the luster off a lot of these stocks, in your opinion? Because they sell that stuff dirt cheap.
I think that that's really valid, that a lot of consumers too, maybe people who don't want to spend the time going in and hunting for that value, it's really easy to find something that's affordable and have it delivered right to your doorstep. So I think that that's another headwind for a name like ROST heading into this report. And we also have a changeover in leadership that we're watching too. I think its new CEO is expected to start in December. So a bit of a changeover in leadership. We also have store expansions that we're watching. I think that they plan to open 90 stores by the end of the year, so that's helping to drive some growth. So it'll be interesting heading into this report. I wish that our data had more of an edge or a lean either way, but we are technically neutral heading into this earnings event.
Yeah, stock's been relatively flat this year, so that kind of sets up right with it. All right, great stuff as always, Megan. Have a good day.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kev, mentioned it's up